Hello, welcome to episode 3 of Healthy and Wealthy with Coach by SB, Sarah, whatever you want to call me. I'm Coach by SB _ on Instagram, and this podcast is all about getting you healthy and wealthy. So all things connected to finances, fitness, and nutrition, basically, and maybe with a side of something else, because sometimes I just like to riff. And today I'm actually going to wing it and talk to you about crypto, because I keep getting asked questions about my opinion on cryptocurrencies, and in particular Bitcoin. Now, let me just say, firstly, none of this is going to be financial advice, and your capital is definitely at risk. And I also would really strongly suggest that as an opening intro to investing, you don't start with Bitcoin or cryptocurrencies, because there is a lot of volatility in that market. And I will tell you all about that. So, firstly, am I bullish on Bitcoin? Well, I think actually, firstly, what I should tell you is that if you are bullish on something, or, that term gets used a lot in finance, bull market, there's an actual bull on Wall Street in New York. It basically means that you are positive that it will go up. And a bull market is where everything seems to be going up. A bear market is the opposite of that, when everything's going down. So if you're bearish, you're more reserved and you don't think it's going anywhere. So with Bitcoin, there is a hell of a lot of volatility. Now, volatility really is just movement in the price. So Bitcoin can be up here and it can be down here the next minute. It's gone from about 30,000 USD whenever that last was, and it's, I think, currently over 100 at the minute USD, or it was in the last few days. But like I say, it swings a lot. Does that always equate to risk? It's mostly to do with the volume of trading and the liquidity in it. So I watched a very interesting documentary or keynote speech, actually, that somebody quite interesting sent me yesterday, by Michael, I've got his name there actually, Michael Saylor, who is the CEO of MicroStrategy, who bought Bitcoin and used it on their balance sheet, because his fundamental view was that it's the S&P 500, if that is the benchmark for returns on money, cash and bonds are negative because of inflation and things like that. And then the Magnificent Seven have returns way above the S&P 500. And then Bitcoin is the highest returner for shareholder value. So his argument was that everyone should have it on their balance sheet, which is quite interesting, because I believe I did read something the other day that was about 279,000. Might be making this up, actually. And who knows if everything you see on the internet is true. But there's more and more people effectively buying that asset because it influences the share price upwards, basically, because they're holding an asset that's grown in value, which was quite interesting. And his whole premise, actually, so I have bought and sold Bitcoin previously. I think blockchain is a very interesting concept, and I always like to explain stuff as if I was explaining it to a 5-year-old. So forgive me if I do dumb things down a bit. It's mostly because that's how I understand things. So I might oversimplify at times, but it helps my understanding. And the thing about, I've absolutely lost my train of thought. This is why I'm winging it and can't even remember where I was going with that. Dumbing things down. Oh, blockchain. So blockchain is a very interesting concept, and it builds trust in the system that bypasses different holders effectively. And there's a record there. There's like a digital record. So you can imagine in house purchases and stuff like that, where there's a lot of trust and there's chain linkages, that process can all be sped up. They have massively oversimplified that and actually probably butchered it a bit as well. So I find that interesting, and also the fact that the more you mine Bitcoin, the less there is of it. So it's a finite resource, and there's a scarcity there, which drives the value up. He also just said something really simple, which, when you think about it, he just said Bitcoin is a revolutionary advance in capital preservation. So he talked about like consumption assets like yachts and things like that depreciate cash and things, and then traditional capital assets like bonds and things like that. And it was just a really interesting concept that if you are not performing higher than the S&P 500 at an average of, I think it averages about 10% year on year, then you're not really performing at all, and you should actually just buy Bitcoin. Was his kind of, I've really summarized that. He also looked at the growth or projections of the growth of Bitcoin. So it's currently like about a 2 trillion total global asset value, roughly. I don't know if that's still true, actually. That might be when the price was lower. That he sees growing to 200 plus trillion in the next 21 years. So if you think about that, that means more people buying it. That would massively ramp up the price. And I think it's not going anywhere. I think that's the thing. It's not going anywhere. And there is more liquidity and there is more people taking money out. And then when people take money out of elsewhere, where are they going to put it? In Bitcoin. And they take it out of Bitcoin to do different stuff with. So it's very interesting, actually, I would say. And I had gone a bit quiet on Bitcoin. But I do think with the rate that it's accelerating in America and the way there's corporate adoption to it and things like that, I think it's probably hit a point of critical mass and no return. And at that point, I think it can only grow because the more people that want it, the higher the price goes. Do I think there'll be more volatility? Absolutely. And I can well imagine if there was some sort of black swan event, which is the pandemic would have been a black swan event, as in nobody would have saw that come in. No one can predict it. And usually these high risk events, nobody does predict, but they do happen every so often. You just can't say when or what they will be. So when everyone's saying there's a bubble, we're in a bubble market, yeah, we probably are. But you tell me what's going to make it pop. And it'll be something to do with a credit crunch or a liquidity crunch or something. If that happens again, definitely people will pull money back out of Bitcoin potentially if they need to do something else with it, like service a debt or whatever. Or the opposite will happen. I don't know. I don't think anyone can really predict the future. We're not Nostradamus, and very few people rarely predict. It's easy to say we're in a bubble and it will burst at some point, yes, because the whole capital cycle is very cyclical, so that is always a fact. There's nothing really that intelligent with saying that. If you could predict when and what the crash was, that would be more interesting. And not many people can do that. But it is interesting the number of people think they're Christian Bale in the long short at the minute, calling that it's going to crash. Yeah, a broken clock is right twice a day. Well done. Anyway, crypto. So the other one that's quite interesting is potentially Ethereum, which I think has more use cases in the real world and therefore value potentially than Bitcoin. But I don't really know enough about it. But I am interested. So I'm getting very curious about Bitcoin, and I think I will go back into looking more into it. And that's what I want to say about that. But I think what got me was the whole, it's a digital. So I did think the blockchain system underneath it was more interesting than the potential currency of Bitcoin. And maybe I still believe that. But I do think the digital asset thing is very interesting. And actually, money's just digital now, predominantly. You also just can't print more of it. You could hold £100. If the Bank of England tomorrow decides to print more money, your £100 is worth £80, whatever. No one can do that with Bitcoin. That's fundamentally what the difference is. And you can you can buy bonds and they return less than inflation, effectively. So it's just interesting, isn't it? His benchmark of the S&P 500 at about 10% was very interesting as well. Never really thought about it like that, but there was this old kind of view of like equities, bonds, and what you should hold. And his view is that 60-40 percentage split or whatever it is will shift over to a big holding on cryptocurrencies. So yeah, interesting. I would love to know what you guys think of cryptocurrencies, what you think of Bitcoin. Like I say, I'm very bullish on it, but that is not financial advice. And I also, your capital would be massively at risk, especially if you leveraged it. This guy was talking about leveraging it as well, which is just wild to me. But maybe that's why I'm not as rich as I'd like to be, because leverage can drive up the upside as much as the downside. So it is very interesting. It's very hard to... The one thing about crypto, and I think this is what puts me off, it's not available to... You can't buy it inside a tax wrapper. I think Trading 212 has just released crypto ETNs, and I need to look at what they are. I imagine they're like index funds or something that tracks the price of Bitcoin without owning the underlying asset or something like that. A bit like an index fund kind of ish. But I am not sure. I need to look into it. But yeah, you have to buy cryptocurrency outside of a tax wrapper, which if you are a higher rate taxpayer, then your profits are... Well, actually, it's capital gains tax, I think, isn't it? I don't even know. I need to have a look into it. So yeah. See, I don't know everything, but I've managed to grow wealth because it is simple. You take your money and you put it into something, a vehicle that will help it grow. And that's it for this week. I'm just talking about cryptocurrency because it's quite interesting. And I want to know what your thoughts are on it. And if you have any questions, let me know and I'll cover them next time. Thank you very much.